everyone, welcome to the 12th lecture of our Retail Banking and Wealth Management revision series. Today we'll be discussing the unit 12 of our module B, that is digitization of the retail banking products. So in this series we are revising all the units of our retail banking and wealth management paper module wise. We have already covered the module A and the previous few units of module B, so make sure you watch them as well. Now, in this unit 12, we'll be discussing about the significance of technology in retail banking, the different technologies being used in the banks. Now, technology has actually made it possible to deliver the services through the branch bank network. Instant updates, checking accounts, rapid movement of money for any transfer. So technology and retail banking is inseparable. This we have already established. It is the foundation on which retail banking is built. The levels of technology implementation, if we talk about the public sector banks, it started from the automated ledger posting machines in the early days of computerization. Today it has graduated to total branch automation. And the new generation private sector banks, they already had the advantage of technology over the other banks. Now, if you remember, in the unit 3 of our module A, we had studied about the processes given by the Boston Consulting Group. We had the horizontally organized, vertically organized, pre-horizontally and predominantly vertically organized model. Same topic is given in this unit also. How the information, how the data is shared among the different products and the product platform. Similarly, technology is also distributed in the banks. Now, some of the banks, they use outsourcing for their technology. Other banks, they use in-house sourcing for their technology implementation. So the technology initiatives in retail banking, we can divide this as follows. Foreign banks, they mostly use the outsourced model, that is, they are outsourcing the technology from the IT companies. The new generation private banks and the old generation private banks, they are using a blended model, a mix of outsourcing and in-house. A blend of in-house and outsourced model is used. Public sector banks, on the other hand, they use the proprietary model where the models are developed in-house by the banks only. So foreign banks who are aggressive on the retail side, they either implement their own software or they source it end to end from the external vendors. New generation private banks also, they were the late entrants, so they already had the advantage of technology. They sourced the same from the external vendors. In public sector banks, it differed among the banks. It was not necessarily related to the size, right? So the implementation progressed with time from a standalone model at the individual branch level to today at an integrated model with networking the branches, right? So the technology adoption has differed among the banks. Some use end-to-end outsourcing, others they develop their in-house model. Information also, it differs, static information or updated information, right? Where technology is utilized in alerts, it is utilized in customer analytics for the business benefits, reducing the time to market and various other areas. Now we come to the most important part of this unit, which is the Institute for Development and Research in Banking, that is the IDRBT. Basically, in the very beginning, when technology was introduced or technology was not prevalent in the banking segment, many economists, researchers, they were of the view that we need technology to upgrade the banking system. How do we implement this technology? For this, RBI constituted a committee on technology upgradation in the payment system in the year 1994 under the chairmanship of Shri W.S. Saraf, right? What was the objective of this committee? The committee submitted its report in December 1994, emphasizing that an apex level institute should be set up to undertake the development and research in the area of information technology, particularly to the financial sector. Specific focus on banking. So RBI, it approved the recommendation and established this institute that is known as the IDRBT, and it started functioning from March 6, 1996. So you need to remember, committee under whose chairmanship gave this recommendation, and then the IDRBT was set up. Over the years, IDRBT has launched the Infinet, Indian Financial Network, the SFMS, Structured Financial Messaging System, the National Financial Switch, NFS, and the IBCC, the Indian Banking Community Cloud. So these technology services are being utilized by the Indian banking and the financial sector, providing convenient banking services to the customers. And these actually constitute the backbone of the information technology in Indian banking. Right? Now, the IDRBT launched these technologies and it was given the responsibility to supervise and monitor it. But it was found that actually in supervising the technologies, the main role of IDRBT was what? Conducting development and research in the area of IT. That was not being given much importance, or that was sidelined. So it was decided that the responsibility of managing these technologies, they will be overtaken by RBI over the period of time. So let us see what was the timeline. So we have seen these 4 technology solutions have been launched by IDRBT, right? Later on, NFS was handed over to the NPCI when in January 2010. Then an external expert review committee headed by Dr. C. Rangarajan was set up, evaluating the activities of the IDRBT. They recommended that the primary role of IDRBT was to conduct research and development. Thus, the institute needs to shed its function of providing the various services. So, what was decided? It was decided that the IFTAs should be set up. The Indian Financial Technology and Allied Services, headquartered in Mumbai, right? IDRBT was the first chairman, and IFTAS took over the functioning of Infinet, SFMS, and the IBCC. We saw that NFS was already taken over by NPCI in 2010. The remaining 3 services were acquired by IFTAS when from April 1st, 2016. Alright. Later on, IFTAS was also acquired by RBI in March 2019. So now we can say that all of these technology services are under the control of RBI. Right? So IDRBT was set up to conduct research and development. They launched the 4 technology services. NFS was taken over by NPCI. IFTAS was set up to take over IBCC. Infinet and SFMS took over in 2016. IFTAS was then wholly acquired by RBI when in 2019. All right. Now let us discuss about these technology services. What is the role that they perform? First, we have the Infinet, the Indian Financial Network. It is a network providing nationwide communication backbone. So there are the centralized and decentralized remittance services. We have the EFT, ECS, electronic debit, online processing. So whatever interbank and intrabank communications have to be made, that is provided, it is implemented through the Infinet. Even the funds transfer under the NEFT and RTGS is being done through the Infinet. So it is a reliable communication backbone. What are the advantages of Infinet? The banking and financial services, independent of the location, we can send the communication. Extended the banking business reach 24/7. We can use the RTGS, NEFT, ECS. Increased security, reduction of the payment risk, efficient housekeeping. decision-making process has been improved, innovative customer-oriented delivery mechanism. So these are the features of the Infinet. We need to remember it is a nationwide communication backbone for the various interbank and intrabank communications. All right. Then we have the SFMS. This is what? This is a secure messaging standard. On the international level, on the global level, we have the SWIFT, which is the Society for Worldwide Interbank Financial Telecommunication. It is the international messaging system. On the basis of it, the Indian version is created, which is known as SFMS. It is developed to serve as a platform for intrabank and interbank applications. So for secure communication within the banks and between the banks, right? So we are using the public switched network, telephone network, integrated services digital network or lease line, and it is not restricted to computerized branches or offices. Even the non-computerized branches can use the SFMS, right? Practically for all the purposes of communication. Okay, so communication messages, any messages has to be sent, like the EFT, RTGS, the centralized funds and management system. There the messages can be sent on their corporate internet. So definitely it is advantageous. Why? Because it provides a flexible architecture, directory services for IFSC directory. Messages can be clubbed and they can be exchanged as a batch of files as well. It also gives user access to the smart card, right? So public sector banks, they have actually been requested to use the SFMS for sending and receiving the letters of credit, bank guarantees. All of these things are covered. Then we have the NFS, National Financial Switch, basically for the ATMs. So it was launched when? On August 27, 2004, taken over by NPCI on December 14, 2009 or 2010, we can say, when it was completed. NFS ATM network has grown many folds, right? There were around, so what do we need? We need the membership. Banks, they need to get a membership of the NFS. A one-time subscription fee of 3 lakh rupees will be paid by the members. Also, NFS sponsorship model works where the sponsor will have to pay 6 lakh plus the applicable taxes, right? The card issuing member also have to pay some interchange fee under the NFS. So the ATMs which are developed or facilitated by the NFS, they provide services among all the members who are participating in the network. So basic transactions like cash withdrawal, balance inquiry, pin change, mini statement, these are offered. Apart from it, other value added services are also there, like interoperable cash deposit, mobile banking registration, card to card fund transfer, checkbook request, statement request, Aadhaar number seeding. So through the NFS enabled ATM, we can perform all of these services. And the last service is the IBCC. We already know what is a community cloud. It is basically a shared technology over the internet that the customers can use, right? It is expanding in all of the industries, including the banking. So a community cloud can possibly be a solution where the cloud services are meant for organizations that have a common objective. So let's say all the public sector banks, they want to have a platform for developing their applications. So instead that they develop their own platform or applications, what they can do, they can get this service from the community cloud, right? So to furnish the cloud services to the like-minded organization, IDRBT has set up this community cloud for the Indian banks. So it is the internet-based computing technology. Large pool of systems are connected through the private or the public networks to provide scalable infrastructure. Now there are three types of cloud computing technology. We have software as a service, platform as a service, and infrastructure as a service. The software as a service, it is on demand software. On internet, the service which is required is a software. So the complete software is provided to the end users as an application. If we want to run their systems, so let's say the banks, they want to run their mobile banking solutions. For that they need a software. Rather than owning a software which would be rather expensive, what they can do, they can get this application through the community cloud. Platform as a service, a computing environment is provided. Now the complete software is not provided. Infrastructure to develop your own software, that is provided. So the customers, they can build their own applications that run on the provider's infrastructure. And the third, infrastructure means the complete package. Servers, storage systems, network, data centers, everything is offered to the customers, and the providers can handle the customer's application workload. So we can say a community cloud is a collaborative service. Infrastructure is shared between the several organizations that have similar goals. So concerns like security, compliance, jurisdiction, all of these can be solved, right? It is managed by third party, or it can be managed internally as well. So these are the four technology solutions that were launched by IDRBT, and they are being utilized by the banks. Now, where technology can be utilized, technology can be utilized in the wealth management solutions, as we have already studied, enhancing the portfolio, higher operational efficiency, and digital lending. In today's financial world, there has been rapid advancement in technology brought by the cloud computing, artificial intelligence, blockchain. So now the process of digital lending involves lending through the web or mobile interface using technology. The entire process, the credit scoring, sources, risk assessment, disbursement, everything happens on the digital platform. So there has been good growth in the digital lending space because of technology innovation. There have been certain constraints. Concerns like mis-selling, breach of data privacy, unfair business conduct, charging of exorbitant interest rate, unethical recovery practices. So, to mitigate the risk in digital lending, RBI has come up with a new regulatory framework, right? When on August 10th, 2022, the name of this framework is Recommendations of the Working Group on Digital Lending Implementation. So now digital lending can be carried out by the entities which are either regulated by RBI or entities which are permitted to do so under any law, and they will have to follow these principles. So we can classify the digital lenders into three groups. Entities regulated by RBI, permitted to carry on the lending business, we can say the various banks. Entities which are authorized to carry out lending as per other statutory or regulatory provisions, they are not regulated by RBI. Let's say the government has given some special permission to some entities to carry out digital lending, and entities which are lending outside the purview of any statutory or regulatory provisions. So three groups are there. The regulatory framework that has been prepared by RBI is done by keeping in mind the first group. So the regulated entities and the lending service providers. In the second group, if let's say any government has given the special permission, so the government is going to regulate those entities. They will formulate or enact appropriate rules and regulations. For those entities falling in the third group, it is proposed that the specific legislative and institutional interventions is taken into consideration by the central government. So let's say the implementation of FEMA, implementation of PMLA. All of these acts will work there. Basically, to curb the illegitimate lending activity. All right. So in three categories, we have the digital lending or digital lenders. RBI is controlling the first category. Second category, let's say NABARD has set up, given some permission. Third category, central government. Now, what are the highlights of the regulatory framework? Concerns on customer protection and conduct issues. Fees or charges should be paid directly by the regulated entity, not by the borrower in the credit intermediation process. LSP or any third party, they should first follow the principles and guidelines. Standardized key fact statement should be provided to the borrower. The annual percentage rate should be disclosed. If there is increase in the credit limit without the explicit consent of borrower, that is prohibited. Cooling off period should be given. LSP engaged by the regulated entities should be suitable, right? If any complaint is lodged by the borrower and it is not resolved by the bank, it can be taken to the ombudsman. Technology and data requirements are also there. Data collected by the digital lending apps should be need based, not without the explicit consent of the borrower, right? Option may be provided to the borrower to deny or give consent for the use of specific data. Regulatory framework should be there, like credit information companies, all the reports should be sent to them. All the new digital lending products extended by the regulated entities over their merchant platforms also. This should also be reported to the CICs. All right. So this is how the digital lending works. This was all about the Unit 12. We have discussed the IDRBT, the four technology solutions, and we have discussed how the digital lending work. Now, again, if you are preparing for your exam in this exam cycle, then you can join us in the JAIIB Super Elite plan. This is the all-in-one plan. So you will get access to the live classes, mock tests, and notes for all your 4 papers. Plus, you will also get access to all the courses, all the foundation, crash and cracker batches, capsule batches, everything. So you will not have to re-enroll for the courses again and again. So this is the best course that we suggest. Other than that, make sure that you subscribe to the YouTube channel of Oliveboard JAIIB CAIIB English Medium. Why? Because we are on a daily basis bringing these sessions for you. So like the video, share the video, subscribe to the channel and comment down below if you have any doubts or queries. Now I will see you in the next session where we'll be discussing the Unit 30. Alright, so thank you so much, all the best and have a great day ahead.